Hello traders, Gary Wagner here. Approximately 11:54 in Honolulu, 5:54 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 22nd day of April, 2022, and this is the daily report for gold and silver, our weekend review. This week, gold futures had a strong decline of approximately 3.5% after trading to a high of $2,003 on Monday. It is closing today lower to the tune of $70 at $1,932.50. That's after factoring in a decline of $15.70. U.S. dollar strength was certainly a major component taking gold lower this week. Today, the dollar gained almost 0.5%, is currently fixed at 101.10. However, when we look at the net gain of about 0.5% and look at the decline in silver, which is 0.8%, we can see that it was a combination of selling pressure as well as dollar strength that took gold lower today as well as this week. Silver was hit especially hard in trading this week. Currently, we have silver futures at $24.19 after factoring in a 43-cent decline or 1.75%. But considering that it was trading over $26 per ounce on Monday and closed at right around $24, we see a decline this week alone of about $2 per ounce. Intrinsically, dollar strength or weakness is a major component in terms of price changes in gold because the dollar is paired against gold. We're looking at a fairly long-term chart of the dollar index. Each candlestick represents a week in trading. And if we look at the tact of the recent price advance, it is much steeper, for example, than what we saw in 2018 through 2020, and we have just broken and closed above what I consider to be a former level of resistance at 100.35. This is based upon, of course, a 78% Fibonacci retracement. The data set used for this retracement begins at these highs that we can see back in 2017 and concludes during the lows of 2018. We can also see that that top created a double top both in 2017 as well as 2020. And the fact that we're looking at this particular price point here is significant because we can also see that it did act historically as a prior resistance level. The fact that we have closed above it means that in terms of the next level of major resistance, we have to look at this top, which comes in at 103, and that occurred roughly in April of 2020. The reason I began today's show by looking at a dollar index chart was to show you the relative strength of the dollar and the fact that the recent move in gold, moving from below 1,800 to above 2,000 per ounce, came in light of dollar strength. In other words, it was swimming against the cross currents of dollar strength and still had very strong gains. And while I acknowledge that we had a sharp sell-off this week, gold actually lost approximately 3.5%, I still believe in terms of a long-term view of the market, we are still in a defined uptrend. We have seen no technical chart damage. And when we look at our daily charts, I will show you why I believe we are very close to an important level of technical support. Also, we did send out a trade alert this morning. We recommended initiating a long position in gold. We got in at $1,934 per ounce. Our stop is very tight at 1927, the low today, 1928, and will remain long over the weekend which I believe is a strong call because we have seen Monday's open typically move gold prices higher. We're looking at a daily candlestick chart of gold futures, and I have put a couple of studies to indicate different levels of support and resistance. I use two accepted techniques to identify support and resistance levels. The simplest and the first is simply looking at recent tops or lows in the market as key levels that were either support, as in here, or resistance, such as Monday's action. The second technique I use is to create Fibonacci retracements. In this particular chart, I have combined two different data sets, one which begins at 1776, the low here, up to the record high that came in this year at 2078. You can see the 0 point and the 100% there. The second data set is the correction that followed. In other words, it begins at 2078 and concludes at the lows achieved approximately at the end of March, when gold traded as low as 1885. What is interesting is that we get one price point in both of those sets that are significant. In the case of the longer term data set, it is a 50% retracement that comes in at $1,927.70. And in the case of the shorter data set, the 78% Fibonacci retracement comes in 10 cents lower. The fact that both data sets used come up with a price point that is equal is significant because it strengthens the probability of the importance of that price level. And that's why I believe we have strong potential support at approximately $1,928. In terms of resistance, our first level comes in at 2003. That was Monday's top. We have the next level above that. That is based upon this high that came in mid-March at 2015. And of course, the brass ring major resistance comes in at 2078, which is the highest value gold reached this year, and just $10 below the all-time record high. Traders, maintain your current long position in gold. All trade recommendations are listed on the members page. They include GLD and maintain your current stops. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.